Good morning, traders from each and every part of the world that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets to access various asset classes. Now, number one, fundamental analysis to look at the geopolitical and economic forces moving the market. Number two, we go to the charts to see the implications of this. And number three, we emphasize on risk management so that we jump in. But before I go straight in, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video to mean that you can access it on our YouTube channel at HFM Kenya. Go to YouTube, search HFM Kenya. Like, subscribe, and click on the notification button so that to improve on our algorithms to reach more and more people in our attempts to bridge the educational gap in context of the financial markets. Now, beginning with the major highlights, yesterday we had the Federal Open Market Committee, or the Fed's committee meeting. Fed is short form for Federal Open Market Committee, which is the central bank of the United States. And yesterday in our video on the Daily Money Market Call, we anticipated a hold of the interest rates, and that is what was reflected. We had the previous at 4.5%. We had the consensus or the premeditated at 4.5%, and the actual one which came out was at 4.5%. So we see interest rate here being held, suggesting that the central bank is remaining conservative on the attempts to control inflation so as to have a stable economy in the United States. Now, in his speech, Jerome Powell, the chairman of the Federal Open Market Committee, alluded that the Feds do not need to act quickly to cut the rates despite market expectations, and this will have also major implications, and we are going to see this on various asset classes. So we see the Federal Open Market Committee of the Central Bank, which is tasked with two major roles of, number one, ensuring favorable employment, number two, controlling inflation, in a nutshell, to ensure a healthy and stable economy. Now, we have noticed that many times we get to focus so much on the United States. It's because it's the global power. It polices the international space in every angle, with our emphasis on economics. In short, when the United States sneeze, the entire world catches the cold. So if you understand the economics of the United States in fundamental analysis, then it becomes easy for you to interpret these two other various asset classes. Having this in mind, we also had CPI coming out from Australia, which came out at lower than what was expected for Q4. And this, of course, is going to make the Australian dollar weaken slightly. We'll see this on the currencies with a pointer on AUD USD, where we're going to see bearish momentum. On top of that, also because of the battle in stocks between Nevada and DeepSeek, which was introduced by in the Chinese stock exchange, we affected the movement of certain indices, and we are going to be looking at this as we proceed. Now, on commodities, we will observe that the tension in the world right now is having gold to attempt breakout highs. So, in short, is pushing the narrative for a bullish trend in gold, and we shall see in oil it's the opposite. It's being in a bearish trend. So before we proceed, I see Macklin saying I make sure. Nice comment there, Macklin. Very nice. So let's proceed. Very nice. Very, very nice. It's a good time to be in the market. So we begin with indices. S&P 500. We begin with S&P 500 or US 500 if you may like. We see that 2 days ago, that is 3 days ago on Monday, when we opened the market came in with a strong bearish candle, actually printing up to 3% to the downside, but we see a recovery. So this will bring out the question: was the deep seek tech stock brought about short or long term? We are going to see this as the days proceed, but the answer to that could be seen where price is attempting to fill the gap that it had already created and print price on the upside. So that would mean that we still are in a bullish trend as far as S&P 500 is concerned, as we attempt to cover the gap and price to print above and take out the highs. In Nasdaq or US 100, we see also it affected the movement of this particular index, and we see price coming and attempting to break with failure this key level here, which could automatically qualify it to be a false breakout. We see now price is attempting to breach this gap here that was created due to the insurgence impulse from the deep seek stock, and price to come back and attempt to break above the key level. So bullish also in that context. For John Doe, Dow Jones, that is the US 100, we see quite a similar narrative, but seemingly price is now printing to the upside, with yesterday closing with so not of our convincing bullish candle. We'd want to see the ups being taken out, and because let's see it clearly from a lower time frame. We see prices attempting to break out the high. We do want to see the high being broken out to support the long-term narrative of a bullish trend. It is important to wait for consolidation, beg your pardon, to wait for retracement of price to the downside so that we get to buy at a much more higher risk to reward. Off to commodities. Gold has been attempting to break out the high, to break above the high right here. Would want to see it come and break out the key level to print price on the upside, but they are seemingly not to have much reasons to be bullish. But the overall trend is bullish, so we want to see the highs being taken out. And if we go to a lower time frame like the 1 hour, we will see these attempts more times than once. Very nice. Would want to see the highs to be taken out and price to print above the 27.75 and challenge this key level here or resistance, printing price above as we interpret incoming economic data and old commodities. And with a focus on gold, we know tension escalation and economic data from the United States would dictate this. For oil, we see oil from the daily time frame has been printing on the low side. We'd want to see oil come and close below the 71.51 dollar per barrel. This is because we see the new administration of Donald Trump putting on pressure to on oil producing countries, or OPEC if you may like, to lower the prices of oil in an attempt to cool down the tension in Eastern Europe between Russia and Ukraine. And how does this come about? Russia happens to be an oil producing country, and the diplomatic approach by the new administration, which was actually also attempted by the old administration, is to lower the prices of oil by talking to the oil producing countries, um, um, with their leader being Saudi Arabia, so that an oil producing country, which is an aggressive country, as perceived in the context of the war in the Middle East, can also lower the prices of its oil, which will not fund the war going in that part of the world. So we anticipate this trend to continue, this bearish trend, and price to be bearish for most part of the end of this week. On currencies, with a focus on AUD USD. AUD USD is in an overall bearish trend. We saw an attempt of changing the character from a bearish trend to an uptrend, but this has not held water for a significant amount of time. Now we see price printing the downside. Reason, we have had the CPI coming from Australia being lower than expected, which weakens the Australian dollar, and now we see price continuing the long-term bearish trend. Now, if you are motivated to learn more about the financial markets, know more about the financial market, and most importantly, leverage on information so as to be able to participate in the financial markets with the goal of making possible profits, kindly visit hfm.com and attempt to register for an account right here, and you'll have our experts contact you and guide you throughout the process as you begin this new year of 2025 with expectations to grow in your financial journey. Also, reach out to your mentor or the person who has allowed you to have a space in this series of the Daily Morning Market Call, and they will also guide you throughout the process. So, as a disclaimer, this by any chance is not meant for financial advice. This is purely for educational purposes, and do your due diligence, and most importantly, remember to observe risk management so that you have longer period to practice and make possible profit in the long run. So see you guys tomorrow, being Friday the 31st, the last day of this month of January in the year 2025, to do things the same way, which has proven consistently profitable. Until then, God bless and take care.